Welcome to the August 23rd, 2021 advance report for McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman, with a weekly fast-paced tour of the global financial markets. Be sure to subscribe and share that with your friends and family that have asked you about finance, because we're going to go on a quick tour. I'm President, McGowanGroup Asset Management, and one of the things that we're going to do in this tour is actually take you through the big headlines of the week. NetWorthRadio.com has more in-depth with research and a longer version of this. And you can do Apple Podcast at Net Worth Radio and you'll find us there. Thank you for tuning in to YouTube McGowan Group. This is designed to take you to the next level in understanding the current financial markets all around the world. This was a tough week for the United States. We're not ignoring the geopolitical risks which have increased with the Taliban takeover of Afghanistan, and we're also acknowledging the COVID resurgence. Both of those were bad news, combined with the Federal Reserve saying we're not going to print free money forever. We're going to taper down the amount of dollars that we're creating, and that has to do with inflation as well. Well, the Dow Jones Industrial Average year-to-date price chart shows resiliency at this 35,000 level, which we touched at the beginning of May. Well, we finished the week bouncing back to 35,000 after a setback midweek. Why would the equity market be so glib in the face of such dire headlines? Well, part of it was American innovation. That's the title of this week's program. American innovation overcame the pandemic. Companies returned to record levels, record cash, in record good balance sheet shape. That's the big news in the resurgence of the COVID-19 right now. Companies have learned how to operate, and that's reflected somewhat here. There was a driving force that I saw on my screen that I wanted to bring to you. Wow! Look at this. This was a week for old school technology companies. So I did their 20-year charts just for fun. This is Microsoft, Adobe, Cisco. You can see, we had the tech wreck, which concluded in 2002. The green line is actually Cisco. And you could see this relatively flat period. It took a long time to wake up from that smackdown. In other words, like Texas Instruments hit 100 back there, and it didn't go over it again for 20 years, right? So that was not the place to be for quite an extended period. But now, all-time highs for all three this week. Corporate earnings, good. That's American innovation, and you start to see that reflected in the pricing here. Is that worth paying that multiple? I would say not with too much of the portfolio, and you've got to have a risk control strategy. But American innovation won here. Whoa, what's this? This is the exact opposite chart. This is Alibaba and Baidu. So we'll call this the Yabba Dabba Doo chart. Well, Alibaba and Baidu, like a minus 30-something% for the year so far. Boom, they imploded. Why? Well, they're basically getting corporate earnings confiscated, or they're getting control from the CCP, and that is impacting. Plus, they don't pay a dividend. That's one of the questions when you do international investing. How does the money ever come back to me as a shareholder? Because it'll all come down to, in the end, net present value of future cash flows, including the eventual value of that asset. This is not looking good on the Chinese front. It also pounded the value of emerging market funds. Why? Well, China's not an emerging market anymore. It shouldn't be in that allocation. And that says if you're going to do emerging markets, China is a whole different animal. That's a different decision than emerging markets. All right. This is actually West Texas Intermediate crude having a very, very difficult week. And when we're seeing that, what we're looking at here is also the dollar index. Dollar high, oil low. And you can see that correlation generally throughout the year to date. And it does work longer term as well. When the dollar's high, well, you tend to get lower oil prices and vice versa for a variety of reasons, which we cover more in depth. But it does lead to something. When you take our investment categories, this is important. Tactical safety, especially if the market's range bound. High cash flow, that's global lending. You want to be the bank for part of the portfolio, get paid a lot of interest, and harvest at the right times and add to it at the right time. Growth and income, that's dividend companies. Energy is a big source of dividend companies like the pipelines we've mentioned. Also, innovation. You can include medical dividends in that allocation. And just pure growth and innovation. Those are the four categories. This category is interesting because oil imploded down to about 63 this week. Was that justified, and what does it mean longer term? Part of it is the global reaction to the COVID resurgence, because air travel is the last restoration of demand for global oil and gas, and that's obviously disrupted. Here, this is the exact opposite from what you would expect. This is crude oil stockpiles in the United States. You can see the surplus created during the pandemic, and 20% of that has already been used up, if you will, essentially 20%. So stockpiles continue to go down. Wow, here in the United States, that means the pipelines are filling back up to 2019 levels, and there's great value there. But where is energy relative to a 20-year chart? You cannot instantaneously move to no carbon or low carbon. It takes a process. And when we look at the longer term view, this is 20 years, not real price, but just straight price, 147 high. Oil's returned to a more normal level. And does it go higher, and do you have a super cycle? This is when the Obama administration restricted new supply and implemented the first round of the new Green Deal. Oil very quickly went to 115, didn't go below 75 until, God bless Texas, the shale revolution oversupplied the market. Where do we go from here? Could be a super cycle once this COVID resurgence round begins to subside. And the medical dividends and innovation, the strongest category in the portfolios for the last 90 days or so. Come down to the Crescent or set your time for a Zoom meeting to update your plan for the next 10 years, which are going to be drastically different, I believe, and require different strategy for the next 10. Thank you for tuning in to YouTube McGowanGroup. Thank you for tuning in to our YouTube channel. I'm Spencer McGowan, President McGowanGroup, your financial weatherman. We sponsor each week networthradio.com broadcast that has the charts and graphs, many of which you saw today. We also sponsor this YouTube channel. Be sure to subscribe for fast breaking news, an alert when we post something in a market condition that may have changed. Our goal is to help you as an investor make the right decisions at the right time. And that's part of what this YouTube channel is about, as well as networthradio.com. I am well served with a team of 10 people, including myself. And that team that cares is actually made up of people who devoted to your net profits and your success, as well as excellence in service. If you want an educational experience to follow this up, get to networthradio.com, themcgowangroup.com. Right here, we disclose our net client experience all the way back to 2001. What that includes, the bear market cycles of 02, 08, 2018, and the recoveries through the most recent quarter. That is true education of investors, and exactly how our clients have done, disclosed right here. Further disclosures, value at risk of loss. Yes, investments are going to fluctuate. That's part of the reason for this broadcast. And that can actually work to your advantage. We'll build that into your plan. So I urge you to go to networthradio.com, fill out the preliminary client questionnaire, a free 1-hour brainstorming session by phone or at the Crescent in Dallas, and we will map out a multi-year plan for you and your family that's appropriate. Just because we talk about a security on this broadcast, or any securities, doesn't make it a recommendation for your portfolio until you have that written plan. thank you for tuning in today, and we'll be back next week as your financial weatherman.